Hello and welcome. Because of China's aggressive military posturing, India and many other countries of the world are trying very hard to decouple their economies from China. The dependence of their economies on the value chains and supply chains based across mainland China. How successful is this effort likely to be? China accounts for about 15% of India's imports and 5% of India's exports. Will India really be able to break the dependence on China, and how do we ensure that we're successful? To talk about ways of unshackling from the Chinese economy, we are joined on this special conversation by Dexter Roberts. He's the author of a new book called The Myth of Chinese Capitalism, The Worker, the Factory, and the Future of the World. He's reported from across China for more than 2 decades. When he was with Bloomberg Business Week in Beijing, and has been the Asia News editor there. Also with us on this broadcast is Anant Krishnan. He has a book coming out into the stores very soon called India's China Challenge, a journey through China's rise and what this means for India. Also with us for a perspective of how Chinese companies are perceiving the recent economic moves made by India. We're joined by Santosh Pai. He's the partner at an Indian law firm called Link Legal. He works very closely with several Chinese companies that are doing business in India and can give us the Chinese perspective on what's happening. So Dexter Roberts, welcome. I want to start by asking you first what you think of the economic blowback that China is facing, not just from India, from the United States, increasingly from other countries where they've been doing a lot of business recently, and what kind of an impact do you think this will have in helping these countries, and we're talking primarily about India in this case, break away from the economic shackles of being dependent on China for various products?
Well, I would point out, first of all, that this sort of global reckoning, if you will, with such a heavy reliance on China for multinational supply chains has been coming for a while. And certainly the world's attention has been focused with COVID-19 on the risks of being so heavily reliant on one country for much of the global supply chain. But it came before that, of course, during the 2-year trade war with the U.S. And even before that, with rising costs in China, particularly rising wage costs. We've seen big multinationals for a number of years been looking at how they can diversify beyond China. And that includes the big ones like Apple telling its big Taiwanese suppliers, Foxconn, but also Pegatron and Wistron, that they need to actually work very hard to find other production bases outside of China. I think potentially this ongoing shift is an opportunity for countries like India. Obviously, that's one key other market and production base that multinationals have been looking at and actually moving to. And I just note that one of the great values that India has that it shares with China is its very large and its very large existing and potential market. As companies look at diversifying their supply chain, they're not just looking for low costs and a production base, they're looking for markets. And India, with its young population and its economy, obviously is a very good place for them to consider, if not make the move to, as they move beyond China.
Now, so over 2 decades, you've had, Dexter, a ringside view to the growth of the Chinese economy. The Chinese government has embarked on a plan where it hopes that by the middle of this century, it becomes the preeminent power of the entire world. And so far, because other countries were as open to trading with China as they've been over the past 3 decades, China has been able to grow really fast. Do you see more barriers to trade being created? India most certainly is becoming far tougher when it looks at Chinese companies than it was in the past. And to what extent do you see these international moves slow the growth of China going into the future?
I think absolutely China's facing headwinds. By one count, I think it's probably at least a dozen of its top 20 trading partners it has not very good relations with right now, whether it's the US, whether it's India, Australia, the UK, Taiwan, Japan, South Korea. There are tensions all over the place. And we're seeing real pushback against what people have referred to as China's wolf warrior diplomacy, which has been matched with these quite bellicose actions, not just in the Galwan Valley in India, although, of course, that's the most very, very significant and what we've seen most recently, but also Chinese aircraft crossing the unofficial midline in the Taiwan Strait, clashes with Vietnam in the South China Sea, continuing actions near Japan in the Senkaku Islands, or near the Senkaku Islands. So I do think that we are seeing a bit of a global reckoning for this relationship with China. It could affect as well the Belt and Road Initiative. And I think that's going to make things increasingly difficult for China going forward. I would also just say this old dictum of Deng Xiaoping, the former leader of China, keeping its head low and biding its time, is clearly been abandoned under the present leadership of Xi Jinping. And I think, indeed, we're starting to see pushback against that around the world.
Now, Anant Krishnan, over the past few weeks, India has taken a few tentative measures towards pushing back China's penetration into the Indian economic story. However, India's dependence on China's economy is far more than China's dependence on us as a percentage and as a proportion. Do you see the moves that India has made so far, the signals and the actual moves, having any impact on how China perceives India? Is the pushback strong enough?
I think absolutely, Rahul. I think India has sent a very clear message that it cannot be business as usual. And I think that has been received loud and clear. The ban on 59 apps was prominently covered in China, generated a lot of debate and concern in China. That one of the officials of TikTok has gone on record to say it derails their global ambitions. And I think it wasn't just, signaling. There was a lot of substance behind that move. I think sometimes in the debate of how dependent we are on China, whether we can boycott China or not, it kind of gets obfuscated in an all or nothing debate. Either we fully boycott them or we are helpless. I think the reality is different. I think there are a lot of short-term measures India can take, such as the app ban, such as limiting Chinese presence in telecom or 5G. And of course, there are longer-term measures which we'll have to take that cannot be done overnight, which is, of course, related to our structural import dependencies, for instance, on active pharmaceutical ingredients, on auto components, or even something like fertilizers. So I think it's a range of measures India has to take, but I think it's very clear, Rahul, that it's not going to be what it was pre-June 15th. Make no mistake about that.
But the one fear that the pro-trade with China camp has when you talk of economic measures is the what if. What if China does the same to India and starts saying that, okay, we will not supply the pharmaceutical ingredients or some of the capital equipment that you require, the construction equipment that you require, or the telecom equipment that you require, which in the immediate short term could have a massive impact on the Indian economy, and various things and various supply chains in India could suddenly just shut down or slow down. How real is that apprehension? Is that at all something the Chinese companies or the Chinese government would be thinking about, or is their primary task at this moment to somehow end this economic blowback? Because ultimately, if what India is doing becomes a bellwether for the rest of the world, then the problems continue to multiply for China.
I think you're right. You did point out, for instance, that exports to India comprise a very small percentage of China's trade basket. But at the same time, as has been pointed out recently, China enjoys a $65 billion trade surplus with India, and that's about one-fifth of China's entire trade surplus. So on one level, even if trade with India isn't a huge priority, I wouldn't discount it either. It's a big source of profit for China and for Chinese companies. And I think that's why they would really think twice about increasing this trade confrontation with India, and I think they want a return to normalcy. But having said that, Rahul, I think that this global reckoning, which began maybe 2-3 years ago, has begun somewhat late in India. And I think that we have spoken a lot about reducing these dependencies, which is one reason why Make in India was launched. But frankly, in 6 years, we haven't really made that much headway. And one can only hope that there has to be a strategic decision on critical industries, like whether it's pharmaceuticals or even for that matter, telecom equipment, on what we are going to do for the next 5 years. There has to be a long-term plan, and it has to be implemented starting now.
Santosh Pai, you work very closely with several Chinese companies. How are they viewing the border hostilities between the Indian and the Chinese army, and the kind of very firm, determined pushback, not just the government of India and Indian companies, but the Indian public are making, where several have gone on record to say that we will simply not buy Chinese products?
Yes, Rahul, I agree with Anant to the extent that there's been a strong signal that has been sent both from consumers in India and the government. But having said that, this is not something new for Chinese companies. They have been facing adversity in various parts of the world. What Dexter was talking about, for 2 years, they've been in the middle of a US-China trade war. So they are more comfortable with this, dichotomy between doing business with the political rivals. And now and then, whether it's Japan or Korea, they have always faced an uncertain environment. So this is, as Anant also said, this is a little late in India. A lot of Chinese investment has come to India in the last few years quite rapidly. And this is a reaction of the Indian establishment to that reality. So the perspective right now from Chinese companies is that they're waiting and watching. They're hoping that in a couple of months from now, there'll be a new equilibrium. There'll be a new environment where Chinese companies will decipher what is now feasible, what investments will be welcome, what kind of trade is possible or profitable. If India keeps increasing the cost of doing business for Chinese companies, they will, of course, look for other avenues. So this is something they're comfortable with. Now, coming to unpacking the trade numbers, as Anant also referred to, there are different levels. There are some low-hanging fruits with footwear, textile, apparel, so on and so forth, which within 1 or 2 years, with the right kind of policy incentives for Indian MSME sectors, this kind of self-reliance can be achieved, or the dependency on China can be reduced. Then there are about 62% of imports from China is machinery and engineering goods. These are typically products which require large-scale investment and scale to achieve, optimum pricing. Then there are, other plastic products and base metals like steel and aluminium. So it really depends on what India prioritizes. Electronics, to a large extent, we have managed to convince Chinese companies and other manufacturers that Dexter was referring to, like Foxconn, to increase their production in India. So this is, it could range between anywhere from 2 to 8 years, depending on which industry you're talking, to move the needle, so to speak. And coming to your last point about retaliation, I agree that China will not hurry to retaliate. It has a number of options. It could retaliate against Indian companies operating in China. Some of them were actually seeing improved market access last couple of years. So they could face the heat. They could also prevent Chinese companies, especially where SOEs are the exporters from China, from preventing them from exporting some crucial materials for the Indian economy, whether it is pharmaceutical ingredients or some kind of other products. So they could, but I don't think they will be in a hurry to do it. They will wait for the whole coronavirus and the lockdown to be closed and Indian economy to come back, and then choose a time to take such retaliation. But having said that, if this sentiment blows over, they are happy to accept the new reality. if internet applications are an area where India comes out very heavily against Chinese companies, there could be a readjustment in that sector, and you will see fewer internet companies from China. But most of our investments, in fact, about 90% of the direct investment from China is in manufacturing. But that could still continue in some form, because we are at the same time, Indian government is now talking about attracting global value chains and supply chains. And it's very difficult to find any industry in which Chinese companies are not an integral part of this value chain. So that will again be a very complex task for India to attract global value chains to India, to shore up our domestic manufacturing sector, and without having Chinese companies as part of them.
Okay, Dexter, Robert, Santosh makes an important point that the value proposition, especially cost and to some extent technology offered by Chinese companies at this moment, they believe is so strong that even if companies were to try to move out of mainland China into a country like India, it is unlikely to succeed. Do you believe that is true? How can India fix that if that is true? And secondly, China is hoping, as has emerged from this conversation, that the current crisis will blow over, that a new equilibrium will emerge, which will be almost close to the situation that existed earlier. Do you think that will be the case, or do you believe the coronavirus pandemic and China's strategic aggression in the Indo-Pacific region really signals a new normal which will be nowhere close to the old normal? Dexter Roberts.
Yeah, well, I think it is true that, first of all, we're not talking about decoupling from China, because that's a fool's errand for a lot of reasons. Primarily the amazing ecosystem of companies and infrastructure and logistics that makes it still very affordable to produce in China, but equally so because of the massive China market. The issue is not decoupling, but it's diversifying the global supply chain. It will be challenging for India and other countries to bring in manufacturing and compete with what China has built up with multinationals over the last couple decades. There's no doubt about that. Having said that, I do think that there is now a real reckoning amongst multinationals around the world, as I said earlier, following the trade war and now with COVID-19, about the risks of being too or overly reliant on one market for production. So I think that is shifting. It began a while back, and it's going to continue. And as I said earlier, India certainly can be the beneficiary of that. And as I mentioned, India has, like China, it's one of the few other countries in the world that has such a substantial market and a potential market, which is also very attractive for multinationals as they start to look where next to diversify their global supply chains. As to whether there is the possibility.
Go on, please complete what you're saying.
The second question, whether it will be possible for the world to return to the status quo with China, as China might be hoping. I actually don't think so. I think that, I was in China for over 2 decades, and what we're seeing now is a qualifiedly different approach to the world, which is much, much more assertive and, frankly, much more bellicose and aggressive. And I don't think China's ready to step away from that for a whole variety of reasons. I think the calculation's been made at the very top of the leadership in China that they want to have a far more important global role, and they're willing to pursue that even when not only ruffles feathers with other countries around the world, but actually can lead to like the military clashes we've seen recently with India. And I think we're going to see more of that. So I do not expect any possible return to the status quo going forward with vis-a-vis China.
Anant Krishnan, one of the points that emerges in the paper that you wrote for the Brookings Institute is China emerging as an increasingly important source of capital for Indian startups. Now, how does this pushback in India impact, of course, the future inflow of Chinese capital into Indian startups, where any venture capital fund would be highly apprehensive of wanting to increase its stakes in a company where in any case you don't know whether that company will do well going into the future or not. Even if you take a bet, are you willing to take a bet, because geopolitically the situation could change? And secondly, would there be adequate capital available elsewhere to be able to ensure that even if the Chinese capital tap dries up, it doesn't really hamper the growth of the India startup story?
That's right, Rahul. I think there already have been noises coming from China, from VCs, saying that they are rethinking plans vis-a-vis India because for the same reasons that you mentioned, of geopolitical risks and whether or not they should go ahead. And I think that the FDI amendment that India rolled out in May, which actually preceded the clash in Galwan Valley, created a lot of attention in China, given that it no longer allows FDI through the automatic route. So I think they will certainly be scaling back. There has been a huge inflow of Chinese investment into this sector, but at the same time, there is a lot of money coming in from elsewhere as well, starting with the US and from Japan as well. So it's not that we are entirely reliant on Chinese money, but at the same time, there will be a decision going forward if Chinese companies choose to pull out. It's well known now that a lot of India's unicorns have substantial amount of funding from Chinese companies. We'll have to wait and see how that goes forward. But I think, as Santosh Pai mentioned, I don't think anyone's rushing to pull out money at this very moment. It's more of a wait and watch approach to see whether this blows over or whether India will further tighten FDI moves as it already did in May.
You know, this is something to which there is no immediate answer. Are we just sending a message and will we start pulling back in a way that a new equilibrium emerges and the current economic storm with China blows over? Or will there be a definite cutting of the umbilical cord, which is what this military aggression by the PLA really signals and portends to the Indian people? There can be no business as usual. So we'll watch out for what the government does and how this impacts the India-China business relationship. For the time being, Dexter Roberts, Anant Krishnan and Santosh Pai for joining us with your very unique and deeply researched insights. Thank you very much. Much appreciated.
Hello everyone, this is Rahul Kamal here. Hope you enjoyed this video. For the latest news and analysis, like and subscribe the India Today YouTube channel, and don't forget to press the bell icon to stay updated.